Hello again everyone, Andy here with Garcia Research, and I wanted to talk to you a little bit about how to spot a trend change. In this brief video, we're going to talk about the 6 key tools that you can use to identify a trend change in your Forex trading, or any trading for that matter, and it can be applied in any market on any time frame, and it can be used across the board. So let's get started. The first key tool that I always like to talk about, and this is like one of the most basic tools that I ever use, is that I always like to go and take a look at the line chart. The line chart is one of the simplest charts that you can use, and it's probably one of the easiest ways for you to identify trend changes. The key though is what you do is zoom out on the line chart. Most importantly, what everybody likes to do is zoom in. They're always focused on the micro time frames, or they're always so focused on what is the market doing so close to price action or the latest price points. But what you want to do is actually zoom out and get a bird's eye view of the chart, and that gives you an idea about when the market stops going up. When the market stops making higher highs and higher lows, and it actually curls over, we like to call them rounding tops or rounding bottoms, then you can actually identify little quick trend changes that are happening a lot quicker than just looking at simple indicators and stuff like that. The second tool that I like to use is what we call the market divergence, or an indicator divergence. But a lot of times when you look at markets and you're comparing two different markets that should be correlated with one another, and they're actually moving in the same direction, when one market decides to move the opposite direction of the other market, then you have what's known as a divergence. This is common for Dow theory. When you look at how in the past they used to use the Dow Jones Industrial Index, and then they also used to couple that with the Dow Jones Transportation Index. When both of them moved in the same direction, there was confirmation that the market would continue in one direction. But when you had the industrials not moving in the same direction as the transportation index, then there was a divergence. So divergences are really useful tools that you can use. A lot of times in the modern day, what people are using with divergence is their indicator divergence. So if the market is going up but your favorite indicator is going down, you know that there is a disconnect there, and it typically gives you a pretty decent signal that the trend is changing. A lot of times what we do is apply this divergence to our favorite indicators like the stochastics, the RSI, the MACD, whatever. You could even find it in the CCI, but these might be a little esoteric for some of you beginners out there. So just know that divergences are a really good way of spotting a trend change. The third way to spot a trend change is what we call trendline breaks. So one of the simplest tools to use in technical analysis is a trend line. When the market is moving dramatically in one direction, let's say it's making higher lows and higher highs, you can draw a trend line beneath the chart, and it'll illuminate the fact that the market is in uptrend. One of the favorite events for technical analysts is to look for a trendline break. So if the market has been going up for quite some time, and then you get a trendline break, you can expect that the market has probably at least stopped going up for a duration of time, that the trend has changed. Similar to, the opposite is when the market has been going down and there's been a trend line break from the downside. So if you see price go back above a trend line, you can tell that the market has stopped going down for a duration of time. It may continue in the direction, but you know that at least for right now there's a pause, and that the trend has stopped. The fourth tool that I like to use for identifying changes in trend is what we call moving average crossovers. And moving average crossovers are some of the simplest ways and effective means to actually identifying a trend. Usually what people will do is they'll use the longer term moving averages. Some do use the shorter term moving averages, but a lot of the higher time frames like the daily charts, it's really simple to use the 50 and the 200 period moving average. When you have the shorter moving average cross above the longer term moving average, that has a tendency to signal that there is an uptrend or the downtrend has changed to the upside. And the opposite is true, that if you have the 20, you have the 50 above the 200, and then the 50 crosses below the 200, you'll notice that there is a trend change and that the market will start to go down. So moving average crossovers are a pretty significant tool that people will use to spot trend changes. One of the more advanced tools that I like to use that not a lot of people talk about, but it's a tool that I like to call, or that's known as price and time overlap. Price and time overlap simply measures the retracements in an uptrend. So the retracements in an uptrend have a tendency to be uniform. They'll have a tendency to be somewhat similar in size and in time, and their tendency for them to continue throughout the trend is something that I look for. So after a trend has been in effect for quite some time, what I'll do is pay attention to the fact that a retracement may go or exceed the amount of time and price that a previous retracement had gone. So if, let's say for instance, on your way up in a trend, your retracements have been all in uniform at 2, 3, or 4%, and they have all been in the same amount. Well, if you see something that's probably about 6 or 7% of a retracement, then you know that the market is changing and that you might want to take a look at what's happening there. You'll notice it too if the market is on a downward trend, right? So if the market had been on a downward trend, but the retracements had little blips to the upside of 2%, and then all of a sudden you get to the bottom of where a major support level is, and then all of a sudden you get a 5 or 6% retracement, you know that the downside is probably complete. The same thing happens with time. The same thing you'll notice is that the retracements have a tendency to take the same amount of time. And so if you get a retracement that takes a little bit more time than all the rest of the retracements, then you know that the trend has probably changed. The final tool that I always like to talk about, and this is probably going to take a little bit of time for people to actually learn, is what we look at are reversal patterns. Reversal patterns are usually the ones that we would associate with classic technical analysis, and they always, one of the most commonly known reversal patterns is the head and shoulders reversal. So you can always think of the head and shoulders reversal from the upside, or you can always think about the reverse head and shoulders, which always culminates the move down. But there are also a list. There's also a number of other reversal patterns that we look at, talking about double tops, double bottoms, triple tops, triple bottoms. You have broadening patterns, you have wedges, you have triangles. So there's a number of actual reversal patterns that are common or that are popular in classic technical analysis that have been practiced for well over almost a century now that we're thinking about it, going on 80 years now that I'm looking at the time frame for when they were actually discovered back in the 30s and 40s. But these are really great tools that you can use to actually identify and spot trend changes, and they're really helpful and they should benefit you. So if you're looking to get more information, you can take a look at our website, Garcia Research. And if you like this video, I'd appreciate it if you like the video, share with your friends, and don't forget to subscribe to our channel. We hope to get some more videos talking about answering some more of these frequently asked questions for you, and we'll look to see you at the next update.